Okay. So on behalf of the Organizing Committee, it is my great pleasure to welcome the Governor of the Bank of Canada, Tiff Macklem, to give the closing remarks of the conference. Governor, the floor is yours.
Well, thank you, Cesar, and good evening to all our participants and anybody who's been watching. It is a great honor to wrap up what has been a very insightful day and bring this valuable conference to a close. I'm grateful that what began in 2018 between 3 central banks has grown to include the Bank of Canada, and I am really looking forward to hosting the conference next year in Ottawa. The issue of diversity and inclusion is very close to my heart. And when a central bank governor says something's close to their heart, what do? They give a speech about it. In April, I gave a speech that outlined how diversity and inclusion in our profession and our institution matters. And I went further to argue the case for an inclusive recovery to the pandemic. My colleagues at other central banks have given similar speeches. Indeed, this morning, Chair Powell kicked off the conference by observing that entrenched inequalities that prevent some of our citizens from fully participating in labor markets not only hold them back from opportunities, but they hold the whole economy back from realizing its full potential. This conversation at central banks has sparked a debate about whether central banks are expanding their mandates, whether we're overreaching, getting distracted from our focus on inflation targeting, and even a criticism that we should stay in our lane. My own view is that we are tasked with serving our citizens, not some of our citizens. Now, I probably don't have to convince anyone here that diversity and inclusion matters at every level of economics, finance, and central banking. It helps to avoid groupthink, it improves decision-making, and it fosters innovation. The research presented today by Professor Sarah Smith reinforces this conclusion by measuring gender differences in the way economic opinions are expressed. And as Professor Michael Weber's research underlines, our institutions generate more trust when our citizens see themselves reflected in us. We also heard today that we need to go beyond understanding diversity and inclusion in economics and finance to understanding how the work we do as economists and central bankers affects inequality. And drawing on some of the insights from today, that's what I'd like to discuss before we wrap up. Improving diversity at central banks and the economics profession is important. And we are making progress, even though there is some way to go. And Nobel laureate Esther Duflo's keynote speech vividly illustrated this, highlighting that we need to innovate at every level to accelerate progress. We also need to work on being inclusive, and that can be harder to measure. As we become more diverse, we need to make sure the people we add to the discussion feel wholly included and valued once they're at the table. Research we saw today provided some innovative examples on how to measure inclusiveness. And importantly, we need to bring an inclusive lens to the broader economy so that the benefits of increased prosperity are shared. So how do we get there? I won't pretend this is a comprehensive list, but I would highlight 3 dimensions. We need to be better listeners. We need to be more inclusive and more relatable communicators. And we need to better understand how our policy tools affect equality in the economy. So let me take each of these in turn. As central bank leaders, we can get so focused on where we are going that we can forget to stop and listen as often as we should. And we need to listen more to people who haven't been part of the discussion all along. At the Bank of Canada, we work hard to keep the diverse employees we've attracted by ensuring that they feel heard and included. We have several employee resource groups made up of people from equity-seeking groups and their allies. They're making important recommendations to help build a truly inclusive culture. We've also stepped up efforts to understand diverse perspectives by engaging in a wide variety of groups outside the bank. Our colleagues at the Federal Reserve and the European Central Bank conducted mandate reviews that included outreach and consultation, and we've learned from that. For our review of our monetary policy framework, we met with a dozen civil society groups. We surveyed more than 8,500 Canadians, and we engaged over 200 people in online community discussions to gain insights into what they understood and thought about inflation targeting and the alternatives. All of this input is being considered as part of our upcoming renewal. In short, we listened. We've also added voices to our table. Recently, we helped found the Central Bank Network for Indigenous Inclusion, partnering with the Tulo Centre for Indigenous Economics here in Canada and with the central banks of New Zealand and Australia. And we're very pleased the Federal Reserve Banks of Minneapolis and St. Louis have also joined the network. This group is going to help us gain a better understanding of the economic realities of Indigenous peoples. Effective, evidence-based policy decisions will require insights deepened by understanding. Our commitment is to listen to Canadians' diverse perceptions and concerns. We do that by engaging directly with a broader set of stakeholders and integrating a wide array of perspectives from research, analysis, and other sources into our work. That's how we're going to learn. Communication comes next, and yes, it's close to my heart, so I used my second public speech as governor to talk about it at Jackson Hole. The last 15 years have seen a profound change in how information is shared, consumed, and debated, and central banks need to adapt. The internet has slashed the cost of communication. This has disrupted traditional media and led a growing segment of the public to get their news from alternative channels and social media. But the democratization of information hasn't necessarily made us better informed. With more information has come more disinformation. On top of that, the pandemic and our exceptional bond buying programs have challenged public perceptions of our operational independence. So it's more important, but harder, for central banks to be trusted sources of information and analysis. We build trust by clearly explaining our objectives and actions. Traditionally, we've spoken to people through markets, the media, and experts. We talk to them, and they explain our actions to people. But in this new world of ubiquitous information, we need to develop a direct channel to speak to people. That means being more accessible and more relatable. It means having new communication products and vehicles. Most central banks have started on this journey, and it's no easy task. At the Bank of Canada, we are expanding the scope and reach of our educational programming of the economy and the role of the Bank of Canada. And we want to increase our accountability and relevance through clear, relatable communications. Trust comes when everyone understands the actions we are taking and why. Research today presented by Professor Michael Weber reminded us that part of being relatable is having monetary policy committees that are representative of the diversity of the citizens we serve. And Professor Paula Profeta finds that the best indicator of improved gender equality on a central bank's monetary policy committee is improved gender equality among central bank staff. This underlines the importance of our efforts to attract and develop a more diverse workforce. Factoring inclusion and equality into our policy decisions is where we really walk the talk. Monetary policy is not the primary policy instrument to address inequality, but our policy formulation benefits from more diverse inputs, and our policies can affect inequality. Let me offer some live examples. First, when we set out at the Bank of Canada to review our inflation targeting framework with the federal government, we invited all Canadians to participate in the renewal process, and we published a report on what we heard. One message that came through clearly from Canadians is that they want our policies to be fair for everyone. Our focus on inflation control has long recognized that inflation is particularly tough for Canadians on low or fixed incomes because they are most affected when the purchasing power of cash declines. Low-income workers are also the most vulnerable to the boom and bust inflationary cycles. But is there more monetary policy can do to bring about a more inclusive economy? Very unequal impacts of the pandemic and the exceptional monetary policy tools we have deployed are challenging us to think more deeply about this question. In responding to the pandemic, we paid close attention to its very unequal impacts across sectors and across workers. We're also looking at how the monetary policy tools we've deployed, including quantitative easing, are affecting inequality. As the policy panel we had today made very clear, other central banks are also focused on understanding the distributional impacts of monetary policy. Changes in monetary policy have always had consequences for both income and wealth, on how both income and wealth are distributed. Similar to reducing interest rates, QE works to stimulate demand by lowering borrowing costs and encouraging spending. This supports job creation, and it's clear that the single best contributor to reducing income inequality is to get people into jobs. At the same time, our policy interest rate and QE also affect the prices of assets, and not just the prices of government bonds. QE can boost wealth by increasing the value of assets, such as the investments Canadians have in their retirement savings plans and company pension plans. But of course, these assets aren't distributed entirely evenly across society. As a result, QE can widen wealth inequality. We will look closely at the outcomes of QE here and elsewhere, and we'll work to more fully understand its impact on both income and wealth inequality. Let me conclude. The conference today has sparked important research on diversity and inclusion at central banks and within the economics profession. It's my hope that this will help drive change at our own institutions and around the tables where decisions are taken. And I hope those decisions can ensure the economic recovery from the pandemic is as inclusive as possible. Thank you, everyone who made today's conference possible, despite the challenges of time zones and geographic reach. I look forward to seeing many of you next year, and I really hope we can be together in person in Ottawa. We need to continue this valuable work. Thank you.
Thank you, Governor Macklem. This concludes our third conference on diversity and inclusion in economics, finance, and central banking. Thank you to all the presenters, the discussants, the panelists, the participants, the session chairs, our technical staff who've dealt with all sorts of challenges. We appreciate you. And of course, those of you who are watching online. It's been an incredible day with a lot of, I thought, very productive conversations. And I too look forward to seeing everyone in Ottawa to continue that conversations. Thank you very much and take care.